from celebrity payroll violations to small business embezzlement, pandemic-era fraud, and a millionaire art advisor who stole from her own clients. These are true financial crimes with real consequences that finally caught up. Welcome to Cooked and Booked, the series that helps you spot the red flags, learn from the mistakes of others, and keep your business off the front page, for the right reasons. In this episode, we're unpacking 4 real stories, each one wrapping up with a hard stop just last month. These aren't hypotheticals. These are cautionary tales with real names, real numbers, and real fallout. Stick around. These are lessons you don't want to learn the hard way. Kanye West made headlines again last month, but this time, it wasn't one of his typical controversies. It was about payroll and misclassification and lawsuits. Former employees at Donda Academy say they were teaching full-time, following directions, and putting in regular hours. Everything you'd expect from a W-2 employee. But on paper, they were labeled as independent contractors. No overtime, no benefits, no unemployment insurance, and in some cases, no paycheck at all. The school quietly shut down, and in March, Kanye settled the case. No admission of wrongdoing, but the payroll practices didn't hold up under scrutiny. Here's why it matters. Misclassification isn't a technicality. It's a lawsuit waiting to happen. If someone works like an employee, the law says you need to treat and pay them like one. So here's what you should do. Don't guess. Get classification right. Pay on time and document everything. Bring in a payroll expert before it becomes a legal problem. Payroll mistakes don't just happen at huge companies. They happen everywhere, and they're fixable, if you catch them early. It wasn't a hacker. It wasn't some outside scammer. It was the person running the front office, signing checks, managing payroll, and quietly stealing over $150,000. At AMK Heating and Cooling in Edwardsville, Illinois, office manager Angela L. Cooper had full control of the company's finances. She handled payroll, managed the books, and had access to the checkbook. Over 2 years, Cooper wrote more than 100 unauthorized checks to herself, sometimes forging the owner's signature, other times disguising them as payroll or loans. She also used a coworker's personal information to fraudulently obtain a credit card, accruing nearly $10,000 in charges. In total, she embezzled over $158,000 and failed to report the stolen funds on her tax returns, resulting in a tax loss of over $35,000 to the IRS. In March 2025, Cooper was sentenced to 51 months in federal prison and ordered to pay over $168,000 in restitution. This kind of fraud doesn't start big. It starts small. A bonus here, an extra check there, and when one person has total control over the books with no oversight, they can cover their tracks for years. Never give one person full financial control, even if they've been there for years. Separate duties. The person who pays the bills shouldn't reconcile the accounts. Require dual signatures or approval for large transactions. And most importantly, make sure you have someone from the outside, like an accountant, to review your books with fresh eyes. Fraud doesn't happen just because you trust people. It happens because you didn't check. The feds just landed a conviction in one of the biggest pandemic-era scams in U.S. history, $250 million in fake meal reimbursements. Amy Bach and her nonprofit, Feeding Our Future, claimed to be running massive meal programs during the pandemic, but the numbers didn't add up. Thousands of meals a day, dozens of locations, and millions in federal funding. Only problem? The kids didn't exist. The meals didn't exist. The paperwork was fake. Instead, the money went toward luxury homes, cars, jewelry, everything but food. In March 2025, Bach and a top associate were convicted of fraud, bribery, and other charges. Roughly $250 million gone. Even if you use your pandemic funds properly, the government is still reviewing these programs, and high-profile cases like this make audits more aggressive, not less. If your records are incomplete or inconsistent, you could get flagged, even if your intentions were good. Keep detailed records of every dollar you received and how it was used. Make sure claims are backed by invoices, rosters, and real documentation. And don't wait for an audit letter. Get your paperwork in order now. Even if you're running a clean operation, messy records make you look guilty. She wasn't a bookkeeper. She wasn't an employee. She was the owner. And that's what makes this story interesting. Lisa Schiff was a high-end art advisor, trusted by wealthy clients to buy and safeguard expensive artwork on their behalf. Over time, she stopped making the purchases, or she bought the art and never delivered it. Sometimes, she just pocketed the funds. And when clients asked questions, she covered the shortfall with new money, a slow-moving Ponzi scheme. In March 2025, she was sentenced to 30 months in prison for wire fraud and tax crimes. And again, she wasn't stealing from her employer, she was the employer. There were no checks and balances, no reviews, just a one-woman operation with too much unchecked control. And that's the point. If you're at the top, you need the most structure because no one else is going to build it for you. So business owners, here's what you should do. Create review processes even if you're the owner. Separate business and personal finances, formally, in writing. Have someone else look at your books, regularly. You're not above structure. If anything, being the owner means you need more of it. Think cash-based means stuffing bills into drawers? Not anymore. The IRS is watching, and what they're looking for might surprise you. The new Crackdown targets industries with thin paper trails: salons, auto repair shops, restaurants, places where payments aren't always logged cleanly. It's not just about fraud, it's about sloppy books that raise red flags. And most of the time, it's not intentional. It's just poor record keeping. So here's what to do. Log everything: cash, card, Venmo, whatever. Track tips correctly. Keep receipts. Organize your books. Don't assume it's fine just because that's how you've always done it. The less clear your records are, the more suspicious they look. Clean books keep you out of trouble. That's it for this edition of Cooked and Booked. Some stories were built on fraud, others mismanagement. But in every case, the warning signs were there. Missed, ignored, or never even looked for. So the question isn't, could this happen to you? It's, have you built the systems to stop it before it does? Subscribe to our channel. We break down true stories like this every month, and the lessons only get sharper. Take our accounting solution quiz to find out instantly what kind of financial structure your business really needs. Or schedule a free consultation with CSI today, and we'll help you clean up what's broken or build what's missing. This is Cooked and Booked. They cooked the books, now they're booked. Let's make sure your business isn't next.